Hey everyone, it's Ben Hardy here, and in today's video, we're going to be talking about a loan that is floating out and about in the world that everyone is saying is going to cause death and destruction, or at least the YouTubers that talk about the car market. And this is the 10-year auto loan. Now, I am going to completely demystify this whole 10-year auto loan situation because it's being blown way out of proportion. But before we get into this video, as always, if you want to save time and money the next time you purchase a car, link to my car buying guide in the description down below. Let's get into it. First off, 10-year auto loans are actually nothing new. They have been around for years. And so all of these YouTubers and these media outlets telling you that 10-year auto loans are this new thing that dealerships and lending institutions have concocted to financially run people, well, they're not exactly telling the truth. Because again, when I worked in the car business, I could give people 10-year auto loan, well, not me specifically, but a lending institution could theoretically give someone a 10-year auto loan. Now, we never did it because it did not make any sort of logical sense, and I'll explain that in today's video. But all you need to know is all of these people hyping up the 10-year auto loan are just doing this to get more clicks, and that's all this situation is. This is not going to affect the car market in any substantial way. And to really hit home with this point, most lending institutions don't even advertise that they do 10-year loans because they don't want to do 10-year loans. Now, yes, there are certain lending institutions that somewhat specialize in these long-term loans, but it's honestly not all that common. And so, again, if this situation was as big as everyone's making it, then you would see a lot of advertising for the 10-year loan. But the only reason that you that is watching this video knows about this 10-year loan is because someone needed to make a YouTube video so they could pay their bills. And so they, again, concocted a story around something that has been around for years. Now, I'm actually very familiar with long-term loans because the dealership that I worked at sold diesel trucks. And you know who purchases diesel trucks? Your average everyday Joes. And most of the customers that I helped out didn't make an exceptional amount of money. Some people did, but most people made what the average person makes. But diesel trucks are extremely expensive. And so a lot of these people were spending the equivalent of their yearly income on this truck, or sometimes even more. And so what that meant is the only way for them to afford it is if they took out a longer term loan on these trucks. And a lot of people might see that as nonsensical, but these people made sense of it because it was, a work truck for them, a family vehicle. They could also use it as a recreational vehicle. And so with how much utility they could get out of the truck, they could justify the big payment they had on the truck, and again, buying something that is more money than what they made in a year in some cases. And so I can tell you that I didn't have any customers ever take out a 10-year loan. The typical term that I saw customers take out was a 72-month loan or an 84-month loan. Nobody went above 84 months because as soon as you went above 84 months, the interest rate jacked up so high compared to the 84-month loan that even though the term was longer, the payment didn't change all that much. And a really good example is the one and only customer I had take out a 96-month loan. I never had anyone take out a loan any longer than that. 96 months is 8 years. And the payment difference for this customer on the pickup truck that they purchased was only $50 a month from 84 months to 96 months. But the amount in interest that they would pay extra equated to thousands of dollars over that 12-month term because, again, the interest rate went up by quite a bit. And then obviously the term being extended by 12 extra months is going to equate to even more interest paid. And I remember pleading with this customer. I'm like, please do not do this. I'm like, just do the 84-month loan or do a 72-month loan. But if the payment is too high, just maybe find a side job or something. I just remember I had this conversation for a really long time with this customer, and they almost didn't want to buy a vehicle from me because I was trying to get them to not take out a really long loan. And ultimately I said, okay, you know what? It's your money. You can do with whatever you want with it. And they ended up signing that loan, and it just didn't make sense. $50 a month. I mean, seriously, it's crazy the things people will do to get the payment that they want to get. But again, that was the only customer that I had out of hundreds that took out a loan longer than 84 months because it just never made sense because of the increase in interest rate between, an 84-month loan and a 96-month loan, or if you go out to like a 108-month loan or a 120-month loan, for example. One distinction that I do need to make is the fact that this loan market's a little bit different than the loan market that I worked in. And that's the fact that the interest rate difference between a 7-year loan, for example, and a 10-year loan isn't nearly as much as what it was when I was working in the car business. And so I think that's why a lot of people are starting to bring up the 10-year loan, is not because it's actually something that is new. It's because, they think that some people might justify a 10-year loan in their mind because the interest rate difference isn't as much as what it used to be in the past. But I can tell you that I haven't had any dealer tell me that their customers are taking out 10-year loans. They have told me that 72 and 84 months is what most people are going to. Like, that is still the hard line that was a hard line when I worked in the car business. And so things aren't really changing. Again, like I said, people are blowing this out of proportion. But anyways, let's talk about why this doesn't make any sort of logical sense. So the average brand new car is about $50,000 in today's world, which is pretty crazy. And I'm going to assume a 5.5% interest rate, which might be a little bit conservative considering the recent interest rate increases we've had. Now, I'm not putting any sort of fees or sales tax into this equation. This is just to show you guys the loan difference between different terms. So for a 60-month loan on this $50,000 car, your payment's going to be about $955 per month. And you're going to pay over $7,000 in interest over the term of the loan. And so let's say that you're like, you know what, that payment doesn't work for me. I've got to have a lower payment. So you go up to 84 months. Your payment is now $718 a month. So your payment is over $200 per month less by going for 84 months, which is 2 years longer in loan term. Now, the amount of interest that you pay, however, increases by quite a bit. You're paying over $10,000 in interest, so $3,000 more in interest paid on the same exact vehicle. Now, let's say that that's still too high and you go up to a 10-year loan. And again, this is assuming that the interest rate doesn't increase at all, which it does increase as you go to a longer term. Your payment's now $542 per month, which is just barely over $100 per month less than the 7-year loan. So this is 3 more years, but you're only saving just over $100 per month in this specific example. But you're paying over $15,000 in interest. And so you can see that as you go towards a longer and longer term, the amount that you get off of the payment slowly decreases because the amount in interest that you're paying increases, right? Math. It's just simple math. And so that's why most of the time it doesn't make any sort of logical sense, because at the end of the loan, you're paying so much more in interest. Like, you're literally, in this example, paying more than twice as much in interest if you go for that 10-year loan versus the 5-year loan, which makes sense because the term is twice as long. But on top of that, you're barely saving money, right, per month on your monthly payment. And it's like, if you can't afford to pay an extra $100 to $200 per month on a car for a payment, you should probably go get another job before you go and buy that car. Now, that's going to sum things up, talking about the 10-year auto loan that's going to crash the car market, as everyone is saying, is going to destroy people's financial situation. I understand that, yeah, I make flashy video titles just like everyone else, but I can confidently say that I'm not saying that something is going to affect the car market when it's not, because it's not a thing. And this is definitely one of those cases where everyone is saying that this 10-year auto loan is going to drastically change things within the car market, and it's just not. Nobody's going out and taking out 10-year auto loans. Like, the percentage take rate, I don't know exactly what it is, right? It's impossible to find a statistic on that, but it's gotta be like way less than 1%, because if I can film for over 40 different dealerships and talk to all these different dealerships and have every single one of them tell me that they pretty much never go above 84 months and they'll occasionally do 96-month loans if people like basically beg and plead, and if they do like a special deal with the lender to even get that loan approved, because most lending institutions really don't want to go above 84 months. A lot of lending institutions don't even like 84-month loans. And so, yeah, it just shows you that this isn't an issue. And so now you guys can all go to sleep and just know that you don't have to worry about the 10-year auto loan. It's not really a thing.